What is up, everybody? We are back with another episode of Bullish's Top Stocks to Watch for the Week in Why. Actually, episode 42, the Thanksgiving episode, as I'm going to call this one. But a few things, as always, before we get into it. Hey, these are only my opinions. Do your own due diligence. This is actually what I'm watching, not necessarily what I'm playing, but I'm trying to show you what I'm watching weekly, but also why I'm watching it, right? And if you do or don't agree with me, definitely let me know. I love having a discourse and kind of talking about it. Not to say we'll change each other's ideas or opinions, but it's really healthy, I think, to kind of share those opinions. I love the discourse for stocks, actually. And I don't talk to people in my regular life enough about stocks. So if I can do this virtually, be great as well. But also, hey, real underscore bullish, go and subscribe to our newsletter. The next 50 people that sign up, I'm going to throw in a giveaway for a free shirt. Hey, these shirts are cool to me. I like them. I get compliments sometimes. Just like, oh, hey, cool, like to the moon. Like, yeah, that's what I'm going for. But anyways, real underscore bullish.com, like I said, wherever get your social media, Poison, Instagram, Twitter, stock. So give me a follow there. Help me up on YouTube as well. Give me a like or subscribe. That will be helpful as well. But realbullish.com, go sign up for our newsletter. I keep saying I'm going to do something with it, and I swear I am soon. I'm just kind of playing around with the format of the website and also like, is it going to be website? Is it going to be something else? What am I going to do with it? I have some really good ideas. I just haven't had the time to really get into it. But anyways, I'm going to jump into it. Hopefully you can see my screen. If not, oh well. But I'm kind of so I'm sure we all know, maybe we don't, but over October, over like the previous month, for going from October, CPI, so the Consumer Price Index, rose more than 6%. That was the biggest increase in inflation in 30 years. So right now, I'm kind of looking for companies that have more so like pricing power in terms of like what they charge versus what they get, right? And that's kind of how I'm thinking about playing the inflation trade. But also, there's other things too. Like we have inflation, but also we have supply chain constraints. You can't really shut down a whole world economy and then pick it back up and expect it to like not miss a beat. And that's what we're seeing, especially in retail. Retail showed out last week with varying degrees of success. Even with great earnings, But anyways, that's how I'm trying to think about the next few weeks or months, is playing kind of that CPI or inflation, looking for companies like tech or something like that, or retailers that really have that pricing power, that can have those elastic margins or prices that they can then kind of like not eat the cost, but like pass those on to a certain degree to end users and consumers as well, right? Anyways, hopefully you can see my screen. If not, oh well. But one of them I'm looking at is Agilent Technologies, ticker A. They have the reason I'm looking at it this week. They have earnings. They have earnings on 11. Sorry, they have earnings. Yeah, basically on 11/22 after market close. And for them specifically, they are a play on healthcare and diagnostics, right? So interesting kind of mix there. I've been wanting to get into. That's the thing I didn't do this week. I didn't look at groupings. Dang it. But healthcare, when I looked at it the past couple weeks, healthcare was on an interesting place where it wasn't rising or falling. Healthcare was kind of staying consistent, which I really enjoyed. But also, they're interesting thing because right now they're actually 9% under the average price target average analyst, right? Calling out on, you can go to YouTube, sorry, you can go to Yahoo Finance, you can go to Finviz to kind of get that average price target for analysts. And right now, Agilent is 9% under that average price, which I enjoy. I enjoy that kind of that like 10% area. I don't like it over 20. I don't like it under 5. I kind of like that kind of sweet spot for anywhere from 20 to 5 to show that, hey, there's meat on the bones. I'm not chasing the price. It hasn't got too far extended, but also it's not over that. I don't want to buy something where people are playing like a premium for that, right? That's just how I like to play, at least, right? So yeah, I love that. I love that kind of 10% area. That's a really sweet spot for me. But anyways, another reason I was looking at this, if you look at the same quarter year over year, their EPS growth is expected to be 25%. So looking at this time last year, the earnings per share is expected to be 25% over what the estimate was last year, which is kind of meh for me. I'm not going to lie. I want to see those 3-digit numbers, but there's a couple other things that kind of factor into this one for me. Looking at the last 12 quarters or 12 earnings, they've actually met or exceeded expectations 91% of the time, right? I love to put those kind of numbers at my back and say, hey, I'm playing kind of with the odds in my favor, right? And if you look at over the last 6 quarters, they actually raised 100% the day after earnings, right? So put that in perspective. So over the last 12 quarters of earnings, they've met or exceeded expectations 91% of the time. And over the last 6 quarters, the next day after earnings, they've raised 100% of the time, right? So I love putting those numbers at my back versus like having them as a headwind, right? Like a coin toss, right? you do see, as I'll show with the stock charts, around 921. So like a little earlier this year, there was a sell off, but I couldn't find. So maybe you can comment in the comment section or something, like if you saw any news or what your hypothesis of the sell off was. My hypothesis is that it was technical related, maybe options as well. I don't know enough about options. That's kind of the next area I want to get into to kind of see how options play with that stock prices. But I couldn't find any newsworthy articles around that time frame to justify the sell off. But I do see technically that shit was over. That shit was extended. What do I mean by that? So if you look at like August of this year, right? You see this RSI level is 90. This only goes to 100. As we said before, 70 and 30 are two possible areas of correction, and this motherfucker was at like 90. No, sorry. Yeah, about 90, right? So if 70 is the area correction, 90 is super extended off that. It only goes to 100. And you do see that it reaches that point at the month level and had a sharp decline. It's still over that 70 level, but it's decreased to kind of going a little bit flipped as well, right? You kind of see that sharp decline, and now it caught that footing. Still over 70, but it's kind of trending up in that direction. MACD hasn't yet pinched to be bullish or bearish yet. It's still bullish. You see the blue line over the yellow line at the month level. You see green markers here, so still good. And at the month level, honestly, you see price action. It kind of slammed into the 10 EMA, started to find new footing there, and hopefully we can see that next leg up, right? So that's why I say the sell off, it wasn't necessarily like connected to any type of news per se, just that this chart was getting out of hand. And also you see it at the week level, which is the next thing I want to, like, you know how I like to see things month, week, day usually when I kind of first start looking at something. But as you can see, like at the week level, you still see that extension, right? It only goes to 100. It's already at 89. Around that same time, the end of September, the early August, right, where it starts to start declining at the RSI level, at the MACD, follows suit next level, right? And you do see price actual action following that, right? But the interesting thing here is it did find some footing around 152, let's say, to start that new leg up. And what I do like at the week level is that, RSI, it comes back to be bullish, and you do see our MACD also kind of following that trend. I like to use price action. I like to use volume, RSI, and MACD. Hopefully they line up. They usually don't, but when they do, I love to use that as like, okay, great. I think that this is kind of the action there. And coupling this chart at the week level and at the month level with kind of like that 100% next day price action increase after earnings. I like it, honestly. I wish I would have played this a little bit sooner. I was watching it for a while, looking for a price decrease. Full disclosure, I am in this one, but I wish I would have got it at a better price. But when I kind of saw that it like raises 100% after earnings after the last 6 quarters, I was like, okay, let's go. At the week level as well, it's come a long way from bottoming out. Like I said, 70 and 30 are two areas where you usually see stock price either like to go from the downside to upside or upside to the downside. And you do see that it happened here, right? It was trending under this 30 line. And once it started raising the RSI level, MACD kind of started following suit. Like I said, RSI to me moves faster than MACD. MACD is kind of like that slow moving Cadillac. It takes a long time to stop that motherfucker. And like RSI is kind of like that Porsche, 0 to 60 in like no seconds at all, right? So I like to use those both in tandem to kind of show that, right? They're both on the increase, right? Just at different time frames, right? They started increasing around here. MACD started increasing around here. And that's fine. But you do see right now it's trying to make that regain footing at this 10 EMA. It's over this 10 EMA now, which I love, hopefully increasing for that next leg up. And I think for this one, the chart was just too extended, right? Which is okay. So I really like this one going into earnings this week. The other one I wanted to go into was Restoration Hardware. And I know that I've said that like I don't want to play as much retail. I'm not playing a lot of retail, but I'm playing smart retail in my eyes at least. The reason why this is some JMO, if you're of age and drinking Jameson, you're a winner. I'm just saying. But anyways, Restoration Hardware is one for me, and to me, this is like a play on smart retail for a few reasons. It could not be. Let me know if I'm dumb, and I am dumb. But anyways, going into it, there's like two or three catalysts that I saw for Restoration Hardware on 11/24. They actually have, so this upcoming week they actually have an investor conference or call from this company called Hedgeye. They're 11/24. Look out for it. Hedgeye has a bullish call on them, and they say that so the firm Hedgeye sees a path for Restoration Hardware to more than triple price to $2,000 per share. So on 11/24, so if you're looking at time frame, that's going to be like Wednesday before Thanksgiving. They're going to go into their bull thesis on why they put that bullish bet on Restoration Hardware. But interestingly enough, on 12/7, so December, like the first week of December, there's an earnings report coming out for Restoration Hardware as well. Also, recently on 1029, 1029, the Seeking Alpha quant rating on Robinhood, or sorry, RH, flipped from bearish to bullish, right? So there's a few interesting tailwinds that came out through there. Again, as we saw with Agilent, I think I'm saying that right. Agilent, Restoration Hardware, they have an interesting sell off that I couldn't find any news. Let me know, Restoration Hardware, this is why they sold off. I see the technical reason why they probably sold off. So that's kind of why I'm seeing, okay, great. Like it's interesting that they sold off, even though there was no bad news. Interestingly enough, I know I'm getting really nerdy into this. I love nerding out on shit. But interestingly enough, on the day that it actually sold off, it was around like 8/16, the week of 8/16. That week that they sold off, and I'll go and show you what I'm talking about. Cohen actually had an increased price target. I think it was from 700 to 850. So on the day that they started selling off, interestingly enough, people were getting bullish into it, right? Cohen specifically. And when you look at FinViz and you look over the last 3 months of institutional buying, actually over the last 3 months, RH institutional buying is up almost 2%. So the big dogs are buying this one, even though people are selling it, but it's not really selling. And I'll show you what I'm thinking about. But anyways, I did mention on 12/7 they have ERs or earnings report, right? It's over the last 12 quarters, looking on ahead 2 weeks, and I'm trying to look further ahead now, right? I've noticed that things are reacting like 2 weeks out this time, right? So I'm going to try to get a little bit further ahead of the earnings, right? Instead of looking next week, the next week, next 2 weeks, right? And this is Restoration Hardware. It's actually 15% under the average price target for FinViz and Yahoo Finance. And like I said, anything under 20%, I'm enjoying it. From 5 to 20%, I'm loving that shit, right? Over the last 12 quarters, Restoration Hardware has beat or exceeded earnings 100% of the time. 100% of the time over the last 12 quarters, Restoration Hardware has meet or exceeded their ER expectations, right? Over the last 6 quarters, though, they've only raised 67% of the time, right? So I want that number to be a little bit higher if I'm holding it through earnings. But interestingly enough, when I looked over the times that it raised versus times that it did not raise, the average raise when it does raise after earnings is it raises 13.15%, right? And the average drop after earnings over the last 6 quarters is only 2.5%. So that for me, I'm saying, hey, that risk reward for their raise to drop guidance is or percentage is within the wheelhouse of what I want to do, right? So even though they don't, I want that raise the next day to be higher, 80, 100%. Looking at it, a 13% raise on average over the last 6 earnings is not too bad to me. It's not too shabby, right? I will say that Restoration Hardware is expensive with a price to earning forward of 26, but that is not the highest in the group if you look at its peers. But the revenue growth is the highest. So it has the highest revenue in its peer group, but it doesn't have the highest price to earning ratio, which I think is important. Their margins are okay, middling margins, which I live with, right? But at the month level, it does look like it's cooling off, right? Like I said, 70 and 30 are two areas of corrections. So we'll see at the month level what it does when it gets to this 70 level, if it reverses or not. MACD looks like it wants to pinch to be bearish. RSI is definitely going down, hopefully under this 70 trend line. But interestingly enough, and it'll show a little bit better here in a few. This level here is that 38% fib retracement. 38, 50, and I think like 60 something are the three areas of fib retracements that I look for in terms of important areas of importance. And that's what we're hitting here, right? But also you do see that the price is kind of jamming into this 10 EMA at the month level, which I love, and it's finding some footing here at the month level, right? It's going to be more interesting when I step into the week level. If you see the week level, look at this long consolidation. It entered this channel 428 of this a year basically, right? And it's been holding that channel, up until up from that time, right? Hitting the bottom, hitting the top. This area at the bottom, this lower, is that fib retracement. And basically for a fib, you just kind of, well, it depends what kind of chart software you have, but it's super easy to do. You put one at the low, you put one at the high of the move, and then you kind of get the different levels. I use 38, 50, and usually 61, I believe. And if you can see at that, if you do it from the high to the low of the movement, that 38.2 area, important, is right at that line that you saw it hit, right? I'm going to remove that for right now. But anyways, I wanted to show like, hey, this is an important area that it hit right now, and it kind of bounced off of that, which is interesting to me, but it's still in that channel. At the week level, you do see it wants to move over this 10 EMA. I don't like buying shit when it's too far extended from this line. I like it when it's about to cross, when it finds support, and then when it moves off of it, still touching, right? You do see MACD at the week level wants to be a little bit bullish, right? It's trying to jam up. You see RSI evened out. Now it's like up, moving upward. You do not see any volume over average yet. Sorry, this is at the day level, right? You do not see any volume over average yet. Hopefully, we see that as we get closer to earnings and after this catalyst for 11:24 with that Hedgeye, right? So I really like this. It does have a downward sloping area of resistance. What I mean by that, price action going back from 813 hasn't been able to break this downward channel, but it's getting to a really important area where it's found a lot of support. So hopefully we see a break to the upside. But for me, Restoration Hardware will be an interesting one going forward. Even if I'll probably slow by this one if I do play it, which I probably will play it. The other one I wanted to watch, this is actually bringing back two from last week. I won't go too far into it, but the reason why I looked at VTSI, they actually had earnings on 11:15 after market close. This is an industrial defense play, right? It's kind of like a simulation technology, which is kind of cool. It's kind of like meta in of itself, right? It's in that like virtual world, right? For like military and armies and stuff like that, right? And militaries and police forces, right? I call this out on episode 41, so go back to that one if you want to see my original bull thesis. So I won't go too far into it. But their same quarter year over year growth was expected to be 400% over the last year's same quarter earnings, right? Not only did they meet that expectation, they beat it, and they had a revenue beat. Originally, I was calling out the risk reward at that 7.5 to 788 channel and horizontal support, and that is kind of still true, right? Like I actually did play this one. I played it for the earnings. I did get a nice bump. I think it was like up 5% in the day after earnings in that same day from a red to green, but then it went red again. I did sell it. I'm not in it right now, but I did play the earnings, held it through earnings. It actually worked out for me for the most part, right? But you do see the sell off. So for me, sometimes I'll play just running up to earnings. Sometimes I'll hold it through earnings. That can fuck you one way or the other, but you got to have some metal to play through earnings. But this one, I was willing to do it because it was at this area. And what I called out was this channel support here, right? So this upward channel support, right? This horizontal support here, and it's still kind of playing in that area. So since it hasn't sold off so hard yet, and it meet or exceeded expectations, 400% increase to EPS, I really enjoy this one. I want to see what it does in the next couple of days if it holds this bottom channel, holds this horizontal support. But I would get into it honestly because I think there was actually a price target increase that came into it the next day after earnings to $12 for. I forgot which company. I might be able to bring it up here. Yeah, Maxim Group upgraded 1116. So the day after earnings with a price target of $12, right? So even though people saw earnings, it sold off, but people are still kind of betting bullish on it, which I enjoy it right now, right? The other one I wanted to call out, and this one is a little bit hairier, but I made money off of this one because I called out the break of the channel. It didn't hold the break, but this one I didn't hold through earnings. I sold it before, and I was like upset that I sold it, but at the same time, I knew in my gut it was the right move. I sold it I sold it like right after the market closed the day before earnings, and I could have got a little bit more out of it, but I was still happy with how I played this one. Have a plan and trade the plan. Even when I'm wrong, I was wrong on Cisco this past week, and that's fine for me. So that's one I did play last week that I lost on. But I had a thesis, it didn't hold out. I sold it. I took a loss, but it wasn't like too bad, right? For me at least. So Footlocker is the other one I called. They had an earning on 11/19 after or before market open. So I hate those before market moves, but I'll play them if it makes sense. For me, Footlocker was an interesting one for me. It's a consumer cyclical, and like I said, inflation and supply chains are like two whammies that are hurting retail. So I want to play smart retail. But anyways, I call it on episode 41. So go back to the last episode for my actual bull thesis. But the same quarter year over year growth was expected to be 114%. Not only did they meet expectations, they beat expectations. And they also said their same store sales increased 2.2% versus the last quarter for the same year. That's up 13% higher than 2019. So their same store sales are up 13% versus what they were pre-pandemic. I do. This one did sell off. Interestingly enough, I think that the thing that happened here was they. If you go through their earnings kind of documentation or their earnings call, they actually mentioned supply chain 23 fucking times. Man, you can't say supply chain 23 times and people are going to see that as like a positive thing. So even though they met or exceeded EPS and revenue expectations, they guided up a little bit into the year, which I'll get into right now. But they really kind of like set the expectation, like, hey, don't get too excited for this, because we don't know what the end of 2021 and the start of 2022 are going to be because of all these supply chain and inflation issues, right? Interestingly enough, they did say that customers, even though they might not be getting their first, like if I'm going for some forces and I don't see the forces I want the white forces, but I can also take the blue forces. They're seeing that customers have a higher propensity to say, okay, great, I didn't get the white forces I wanted, but I'll take the blue forces as well. So even their variety in terms of what they hold, not just Nike, but they have Adidas, they have Crocs, they have Tim's. Because of their variety, they're seeing customers buy their secondary option for what they came in for, which is interesting. Anyways, they did mention supply chain 23 times, right? And they did say, based on our current visibility, we expect to deliver sales growth in the high teens for the full year, with comp sales in the mid-teens. So you're kind of guiding up, but kind of down. They're setting in my opinion, they're setting a low bar that they can then jump over next quarter and say, yeah, we beat the shit out of that, right? That's just what I'm thinking. They did say we are expecting the gross margin rate to be up 540 to 550 basis points. So basis points are interesting because it's basically a percentage you can convert it to. So they're saying, our sales revenue is going to go up, and our margin is going to go up 5.5% based on what it was the previous year, right? So to me, even though they're setting the bar low, they're still raising your expectations, just not at the level that people wanted to see, right? They are, interestingly enough, I did see that they're making some moves into the omni-channel experience. So they're moving bigger to be in the digital footprint, not just same stores. They're moving to be increase your same store sales, but they're also looking to increase their digital footprint. So I won't go into the chart. You can go to my episode 41 to kind of see originally what I thought about this one. But I like this one originally. I was playing the break of this. It broke over it. I sold it, honestly, full disclosure, because I was playing the break. I didn't want to hold it through earnings. But this dip is actually pretty nice because this area right here in the middle is that 38 retracement for the fib level. So if you look at the week level, it's a little bit more interesting. Same thing, if you do a fib from the bottom to the top, you see that kind of marker there, that 38 is that middling fib level, right? That you want to see that 38% area, right? So it isn't a downward channel, but I want to see what it does here at this 46.82 level. I want to see if it catches, because honestly, I might be a buyer between these two levels with a stop loss of like 5% under this $47 area, right? Because then you kind of hit bottom of the channel. You don't want to hold something at the bottom of the channel unless you're shorting it, right? So if it broke these, I would short the shit out of it, right? Or get some puts on it. But right now, if it holds support at this 48 level, worst case, this 47-ish level, I see a lot of interesting opportunity there, because it wasn't great earnings. They just didn't give you the earnings in the future that you want to see. But anyways, I'm gonna wrap it up right now. Like I said, Agilent Restoration Hardware, which I'm really excited about. rTra, which is kind of that industrial defense play. Get some more Jameson, and then look at Footlocker. I think it's still interesting because it wasn't anything too bad. Everyone have a great Thanksgiving. Hope everyone eats a bunch of shit. I'm actually cooking some stuff, not anything too crazy, but I will be even fatter and even happier. So I hope everyone else does. Also, it's a short week, so I believe the markets are closed on Thursday, and I think it's a half day on Friday for the markets. So keep that in consideration. There's probably not going to be a lot of big moves this week, but it could be an interesting week to position yourself for the end of the year. That's how I'm going to play it, at least. Everyone have a good one. Peace.